Hello, money magnets and master traders. It's your Uncle Chartist. Looks like the bears once again failed to break down that 50 DMA. They was able to gap below it, but intraday they were able to recapture and giving us a close above it, avoiding a breakdown. We also have this triangle pattern that I'm going to be talking to you guys about later in the video. But before we get there, I have to say price action trading is the best trading. It's the trading style that I've been using for over 8 years. All we have to do is know the levels, know the setups beforehand so that we can trade it in real time. And let me show you guys what I'm talking about. I wrote in my Discord, 667 must clear to give us a bounce and put 669 and 671 plus in play. This was Friday's morning post. I wrote overall bears below 667, and if 665 fails, then we had those lower targets incoming. Be ready to react. So it's not about predicting, it's about knowing the levels and setups and reacting to it in real time. I like to use a 15-minute chart, and you can see here my 667 level cleared. When we clear a resistant level, we enter calls or look to long. And the next candle next to it even back tested that 667 level as a support, letting us know that 667 is a legit breakout. It's now support. And look what happened on the next candle. Cleared my 669 level. It even tested 669 as a support, confirming a breakout, and it continued to push upwards. Super easy if you got the right levels and you have the right time frame. For me, I use my levels based on fib levels, buy and supply zones based on structures, and I use the 15-minute chart to trade. So it was a beautiful trading day. And of course, in my Discord, I alerted the group. Nice bounce to start off the day with 667 clearing. As long as above 669, 671 are in play. We play it level to level with runners. So if you play the 667 or 669 breakout, you would take most profits around 671. And you just leave a runner. Let your runners catch the rest of the move while you already secured majority of your position. So either way, you will be green and the market makers will be pissed. I'm here to make my viewers happy and my fellow master traders and money magnets, help them to make some money. I don't give a damn about those market makers. Now, going to the daily chart, I mentioned that we have a structure here, a triangle structure. The top of the trend line starts from October 29th high to November 12th high, so only 2 touches. And the bottom trend line, we have multiple touches, October 10th low, October 14th low, November 7th low, and November 14th low. So the question now is, will last Friday's be a dead cat bounce, or will it be a bigger bounce to fill the rest of this structure? If we get the bold case scenario, staying above 671 is a must, and clearing 672.5, 674, and 675.6. If we cleared those levels, we should head up to back to the top. We play it one level at a time, 677, 681, and the top of the triangle patterns around 683 plus. We got to get above 683 plus to get in the breakout mode. But if the bulls fail to fill the rest of this triangle back to the top, and this ends up being a dead cat bounce, 671 must fail as support, and getting back below 679 and 667. Those levels happen and go back to the bottom of the triangle pattern, and that would be around 663.8ish or 5ish. So if we break down, if we want to get in breakdown mode, we got to break down 663.5, and that would put SPY in breakdown mode, and it would be extremely bearish. So remember the price action trading principle. Know the levels, know the setups, and let's trade it unbiasedly, whether it's to the upside or to the downside. Moving on to QQQ, did the similar thing that SPY did and avoided a breakdown of the 50 DMA. So if there's more upside, next resistance at 610, 611.5, and 613. If those levels clear, we're likely popping up to 618.7 or above. If this is a dead cat bounce, I need to see support levels at 608.5 and 607 fail, and that should put the 50 DMA around 605.8ish back in play. And if that level is lost, that would be very bearish, most likely sending us back down to the 601 and 599.3 area. And below that level, I would be very bearish because it invalidates the potential double bottom. We've got potential double bottom here, and that should send us higher, but we need to see 610, 611.5, and 613 clear, because if not, and we break back below those levels, 599.3, bulls lost their chance at a bounce. Here is Tesla going for its own bounce here. Now remember, we have this low, and breaking down that low here definitely gave us a beautiful beautiful move to the downside. But last Friday, we got a bounce. It was a very nice bounce. So the main thing the bulls want to do is recapture that low. That's around 414-ish. Get above 414, Uncle would favor a bigger bounce. But if not, if overall that level holds as resistant or Tesla is below that level, I would stay bearish. And from here, 403, 401, and 399.7 are the next support levels I have. Those levels break down, we can definitely see more upside. But if we get above 414, we can definitely see a $20 to $30 pop back to the upside. Here is NVDA, also avoided a breakdown of the 50 daily moving average. That moving average is holding as support. But if there is any bullish follow through, 192 and 195 are the two levels that must clear. Those levels clear, we are heading back to the upside, $15 to $20 back to the upside. But if this is a dead cat bounce, we want to see 189.5, 188, and 187, well 186.8 actually, fail as support. If those levels fail, Uncle would be bearish again on NVDA. Here is Amazon. Now Amazon is looking straight up bearish. We had this low, previous pivot high right there around 238.8ish. We broke it down recently right there from last Thursday. What happened last Friday after the breakdown? We treated that breakdown level as a resistance and it rejected. So overall, below 238.8 is bearish, and above it, maybe we can get a bounce. So if we're talking bull case scenario, 237, 238.8 must recapture. If that level recaptures, I'd favor a bounce on Amazon. But as long as below, I recommend us staying bearish. And the next level that must fail is at 233. That level fails, we're likely going for the gap fill around 227-ish. Here is Meta. Meta went for a bounce and it managed to close and stay above that 608.4-ish fib level that I have. If there is any bullish follow through, 610, 612, and 614 must clear. Above 614, I definitely favor a bigger bounce up to 618, 622, and 627. But if last Friday was a dead cat bounce and we're going to drop back to the downside, we want to see 608.4 and 607 fail as support. If those levels fail, we'll likely drop it down to 601.2, 600, or much lower. We are bear flagging on Microsoft, and with the gap down from last Friday, it looked like it was going for the breakdown, but intraday we had the bounce. Looked like an attack on liquidity if you ask for my opinion. And if there is bullish follow through, we need to recapture that 50 DMA. That's around 510. We can recapture the 50 DMA, we can pop back up to 515, 516.2, 518, and 520. If we're talking about being bearish again, I have support at 508 and 506, and the breakdown of that bear flag is at 504.5. We break down those support levels, let's get bearish on Microsoft. Apple still not going much of anywhere, just from one chop to the next. It does look like a tiny little cup and handle, but we'll see. If we're talking about being bearish, 271 and 269.5 must fail. Below 269.5, I would be bear biased down to 268, 266, 264.5, possibly all the way down to the 260-ish area. But if we are talking about a bounce, if we are to get a bounce, I need to see above 274 to get us to 276 and 277.3, and above 277.3 puts Apple in breakout mode and should send us to 282 plus. Here is IWM also going for its own bounce, and if there is bullish follow through, once again I need to see 237.5 recapture. We lost that level on November 13th. We closed just below that level last Friday, so we can recapture that level. That will be a false breakdown setup. Put in 240.8, 242, 243.3, and 245 plus in play. But overall bearish below 237.5. And if 236 and 234 fail as support, we're likely getting another $5 to $10 drop to the downside. And here is the VIX. It did bounce and it hit my next fib level around 22.96. We could round it to 23 and reject it. So now here we are back testing that 23.6 fib level at 19.43 as support. We broke that level out on Thursday. Friday we back tested it as a support. So that's the level to watch for VIX. If we stay above it, a bounce back to the upside is still possible. But if it drops below 19.43, the VIX is bearish. And if the VIX is bearish, SPY tends to be bullish. And of course, before I let you go, here is the DarkPool level. 1.2 billion in premium, came in at 671.98. We can round to 672. It's up to you guys, but there's a good amount of premium there. You guys can screenshot this if you want. Above it, you can get a bounce. Below it, stay bearish. And that's all I have for you guys today. If you want more content from Uncle Chartist, I encourage you guys to join Uncle's extended family on the Discord. We are kicking the market makers' ass. Let's do it together. Love y'all. Peace.